So I am Tony Hansen, and I'm here to introduce you guys to our Forex panel here today. So one of them is invisible, just pretend you see her there in the middle. We have got Amelia Bourdeau, she's going to be hosting our session. And we've got Kiana, Danial, Invest Diva. So I am going to let you guys each take a minute to tell the audience a little bit about each other, and then Jody Samuels hopefully will pop in sometime. If not, maybe one of you can lip sync and
it'll be fine. We'll have more of a conversation, and hopefully Jody will arrive.
Right.
The flights are very delayed because of storms and things like that. But Jody is in a
take it away,
taxi on her way. Hi, would you like to introduce yourself, give more of a formal bio, and then we can talk about me?
Sure, you want me to go? Of course. So hi everyone, nice to meet you. And I'm Kiana Danial. I'm the founder and CEO of InvestDiva.com, formerly Forex Diva. We switched to InvestDiva as I expanded my trades in investing assets. And I've written a bunch of books, InvestDiva's Guide to Making Money in Forex, and Ichimoku Secrets, and the most recent one is Cryptocurrency Investing for Dummies, which we're going to talk about actually tomorrow, but today's Forex. So I'm very excited to talk Forex and women in Forex today with you.
Yes, I am excited
Invisible Jody.
to be here. Yes, I'm excited to be here. Great to finally meet you in person. We had never met in person before.
Always email back and forth.
So I'm Amelia Bourdeau, and I am the CEO, founder of Market Compass, LLC, and it's a firm that manages and talks about strategy and education for the individual investor about global macro. Forex is my main asset class. And my background is I have 17 years experience. I started my career at the Federal Reserve Board in Washington, D.C., and then I moved on to investment banks. So I've been at Deutsche Bank, a couple of hedge funds in Manhattan, and then UBS. I was the head of FX strategies for North America when I was at UBS, and I was also on the commodity research board at UBS as well. I then switched into trading and sales purely for a couple of German banks after that. One was UniCredit, AGA. So I've worked my entire career basically on the institutional side, and this is my first foray helping you, the individual investor, learn to trade and trade better, bring more institutional research and institutional education to the individual investor. That's what I'm really about. So it's so great to be here today, and I wanted to ask you, let's just talk about the beginning. How did you even get involved in trading?
Right, so my career background is completely different than Amelia's. I did not have a financial background. I studied engineering in Japan. So I lived in Japan for 7 years. I had no idea about finance and trading. Literally all of this lingo was completely foreign to me. I was studying in Japan in Japanese, and I didn't understand finance in any language. When the 2008 market crash happened, all I could hear was that, it's a financial crisis. I'm like, what the heck is a financial crisis? I didn't understand. I didn't know who Lehman Brothers are. But what I was hearing was that the US dollar was losing its value versus the Japanese yen. Now that I understood because I had a bunch of Japanese yen. And I was like, if I'm ever going to go to America, I probably want to buy US dollar when it's cheap. It kind of just made sense. And every day, it was August of 2008, and every day I would go to the ATM machine. I was like, oh my God, it's cheaper than the day before. Should I exchange it today? Should I wait for it to go even lower? And I was like, how can I automate this? I can't go to the ATM every day. Should I write a code? I have that engineering mind. Should I write a code and program it to my ATM so that it can buy it? And I was talking about it to my friend who works at Deutsche Bank. And it's like, oh yeah, the program is already written. It's called trading. You can go to a broker. you can trade. That's really cool. So he hooked me up and is like, do you want to take leverage? I'm like, sure, what's leverage? Let's do it. I had no idea. He hooked me up. Within a month, I put into $10,000 shorting dollar yen. I didn't know what shorting means, but it was cool. And within a month, I made $10,000. I doubled the money. I'm like, this is cool. So I'm like, engineering, bye-bye, I'm gonna go into finance. So I hopped onto the next plane to New York City and got a job on Wall Street, and the rest is history, I guess.
Cool, very good. So my background is I started right out of college. I was an econ major, and very luckily, I was lucky. Got a job at the Federal Reserve Board in Washington, D.C., and at the time, it was the Asia financial crisis and the Russian debt default, and so they needed people in the international finance division. And as you know, especially for now, you know the Federal Reserve Board manages the U.S. economy. So at the time, I was like almost a little bummed I got put in international. I was like, oh, but the U.S. group is the more important group. I got put in the international group, and when we first started working there, all those things were going on. It was very exciting. You learned a lot. But what was more exciting was in the background, it wasn't really in the background. A separate project and separate track was going on, and had been for many years, over a decade at the Fed, of this thing that they were like, this is going to change the world. This is going to be a really big deal. You're going to be one of the first people to see it. They were telling all the research assistants who were there, and we were just super busy. We were working all the time because there was so much going on, and I didn't understand that. I didn't really appreciate it at the time, and then all of a sudden, looking back on it, it was. And the project we were working on was called the Euro. And this was December 1998. This is 1998, and the Euro launched January 1st, 1999. So the Euro is 20 years old this year. So that gives you a trajectory into my age and background. But it was so cool that I was one of the first people there when it went live to see it trade, and it was just, it's such a watershed event. Hey, come on up, Jody. And in any event, you can sit here. I'll stand up. This is on, great. So in any event, what happened was, after a couple years at the Fed, you really only stay there 2 years when you're a research analyst. What they do at the board, which is separate from the banks, is if you want to get a PhD in economics, you can come back and have a job at the Fed. They'll give you a job back. But I didn't want a PhD in economics. It was so exciting to watch the markets move. I wanted to go to Wall Street. And a group of us left, and we went to Wall Street. We went to Deutsche Bank. And so I basically stayed on Wall Street for 15 years. I did not know at the time, when I left the Fed and I was like 25 years old, I was going to go to New York and I was going to stay there for the next 15 years. I did not know that was going to happen. I didn't, but it did. I was super lucky. I was always stayed employed through the recessions, which was pretty key. And so I never got let go. So I just stayed. And I had also thought about applying to business school. And when I went to business school to apply, it was right after the 2001 recession. I went to the information sessions, and they were like, well, what do you want to be? After why you want to go to business school? What do you want to be? And I was like, well, I want to come back and be a trader again. And they were like, then stay. They were like, you have a job, you're making money. They literally told me, don't go to business school. The business school people at, Harvard, London Business School, London School of Economics were like, they were literally, to their credit, the admissions people were like, don't come here. They were like, stay in your job. And so, yeah, that's what I did. And so it was great. And I left a couple years ago to found this firm. So I wanted to welcome Jody. I'm so happy you're here.
Thank you.
It was epic getting here, as I said, all the storms and everything. Jody, can you please give us an introduction to yourself? I would appreciate it.
I would love to.
Thank you.
How long?
An
hour.
Short introduction.
A short?
Yeah, we're going to jump back into the panel.
Just very
more
short.
time at the end, yeah.
Okay, not how I got started like you did.
Just give us a little bit of your bio and how you got started.
Oh, okay.
That'd be great.
Hi, everybody. Coming from Toronto, how I got started. Yes, I actually I graduated from a business degree. I went to Wharton Business School, very good business school, undergraduate. And after that, I got an internship in Norway for 4 months, working in the arbitrage department, which was the trading department. And that was a wonderful experience. I had previously accepted a job working for a manufacturing company in California. And when I came back, when I was there, I said, that's it. I have to turn down this job. I have to come to New York, look for a trading position. This is my passion. This is what I want to do. So that's what I did. I came to New York, and I'm American. I was from the area. And I spoke to 2 banks, JP Morgan and Citibank, and I got a job at JP Morgan, and that began my career on the trading desk, the currency trading desk. And I traded for JP Morgan for 15 years. My first as an interbank trader, then as a position taker, and that took me up to Toronto. That's why I'm living in Toronto now, because I met my husband there, I have a family there, and I worked for them in Toronto for 7 years. So I still reported to New York, actually, but I managed the currency and short-term interest rate desk of JP Morgan, Toronto, Canada.
That's amazing. So can I ask you, what year did you, is that okay? What year did you start at JP Morgan?
Do you want to give away my age?
I gave away mine because my first year in the market was 1998, so I already said that.
Okay,
but
well,
if you don't
you're
want to tell
young.
us, you don't have to, but I'm just wondering.
Yeah, okay, I started trading in 1980.
That's unbelievable.
Yeah, so I
you know,
traded
have
through it all.
So much respect for that, because back in, you had to be one of the first women in foreign exchange in the market. Like, did you even ever see another woman? Like, honest, did you ever
Okay.
see another woman on the trading floor?
So I was the only,
I'm serious.
as long as you're saying, I was called the Queen of the Quid. This is personal information.
This is so interesting. Come on.
I was I was the only woman trading the British pound amongst the big banks,
Yeah.
the big boys, and I was the only female, so I was called the Queen of the Quid, the
Right.
Queen of the Pound. Yeah.
No, that's unbelievable to me, because in my career throughout Wall Street, there's very few women, especially in foreign exchange trading. And I think I worked one time for a woman who had been at Salomon Brothers in the 80s, and that was like incredible. I was like, you probably were the only woman possibly like in the entire company. You know, it was really, that's amazing. That's great, great. Really good, kudos to you. And that shows like how strong a trader you are, because they never would have hired you. You know, there's not that many women in trading now. So what have your experiences been from, like, your trajectory from then till now? And Diana, what has your experience been more on the individual investing side about being a woman in trading?
Right. So since then, I started my own company called FX Traders Edge, and we have an Elliott wave analysis niche. Honestly, being a woman in trading, I never thought of myself as being, I don't want to, it's going to sound funny, as being a woman. Of course I'm a woman, but I treated I just never discriminated between men, women. I don't discriminate against you men. So it just didn't faze me, being a woman in this business, knowing that it's really a man's world. It just didn't faze me.
Good.
I didn't let it faze me.
No, you
because if I
can't.
did, then perhaps
wouldn't be here today.
I wouldn't be here today. I wouldn't be
That's
successful.
a very
I certainly,
great point.
yeah.
So because that, I let it phase me when I was an engineer, and that's why I was the only girl in my class for the whole 7 years, and then when I started working as an engineer, I was the only girl. In Japan, it's actually worse than in the U.S. I thought coming to the U.S. Wall Street is going to be better. It
No.
actually wasn't.
Yeah, it's not, no.
But that in Japan did faze me, and that's why I was happy to give it up. And I thought, you watch the movies in Hollywood and like, oh, I'm gonna go to America, like women are in charge, and they're not. It's just like literally media trying to make you think that. And the second time around, I kind of took your approach, and I'm like, it was tough though, because you feel isolated. So for me, it was a little bit harder, I think, than you were, because
Yeah.
I was probably coming from Japan, always being the minority. It was like, when does this end? Like, I want to have other, I
Yeah.
don't want to, even if you don't discriminate yourself, I felt like others were discriminating me. So that's just how I felt at the time. It's getting better now though.
Yeah, I think that there's more choice in terms of how people trade and where people trade. Even like 5 years ago, it still was only the major banks or the FX brokers which saw the most flow. And now when you look at the BIS data for the largest flows, who does it, there's now digital broker dealers who have broken into the top 10. So I think there's different places to work and more places to work, more individual investors, more private wealth, which just makes for a more diverse investment community, whether that's with the people, but also with the types of style of investment. It's more diverse as well, which brings different types of people in. But I think to both of your points, it doesn't matter if you're a woman or a man. If you're going to make a career in trading, the only thing that matters is your talent, because you get paid. Especially if you're an individual investor, it's even better if you're not working for a bank, because there's no political infighting on bonuses. Like you make what you make, you know, you get paid what you make yourself. It's very quantitative, and I think that's the best part. And if somebody asked me like what's the best part of working for myself now outside of Wall Street, I would say that all that political issues has gone away, and just what I make, and I think that's the best part of it. So it's a little bit scary because you have to 100% rely only on yourself, only on your own talent, only on your own skill. But then when you can take total responsibility for yourself, it's very empowering too. And so that's why you always need to be working on your skill set. So how did you get over kind of your fear, any fear of trading? I mean, even from the start, or how did you work on your skill sets?
So for me, I think I 100% agree with you. I could not deal with the corporate politics. I didn't get it. I was trained, again, as I said, in Japan. I came to the US, I'm like, oh my God, all this politics. I couldn't. So that's the reason why I was actually pretty quick to get on becoming my own boss. And it was tough because I did bootstrap and I had to rely on my own investments and the returns in order to get my company going and get my trades going. So it was self-fulfilling. It was tough, but at least I didn't have to respond to anyone. And I would not trade that for anything else because I see how my husband works for a corporate and all he thinks about is the politics. I'm like, oh my God, I can't. I don't know how he gets any work done because basically 80% of the time it's about corporate politics. So it's incredibly empowering, but it is tough. And through experience, you can get over it. And eventually it has been empowering. If I went back 8 years or 10 years, and I would do the same exact thing that I did. I would not stay at corporate and I would still trade for myself.
So, you're bringing up anxiety for me here, memories.
It is, yeah, the memories, they come, no, trust me.
Yeah, because when you mention politics, oh my gosh, it's bringing back like a whole rush of memories. Yeah, I hated the politics working at the bank. I hated the politics. And yes, there was discrimination, pay, etc. But I just really wanted to make sure I made money for the bank and did the best that I could.
Right.
I hated the politics. I didn't do well with that. So being out of it and having my own business has been such a freedom. I forgot about that for a second because I really had to, not only work with the markets, but I had to work with people. Can you imagine?
Right.
So now I just have to work with the markets. That's hard enough, right? So, but my biggest fear, how I overcame, my biggest fear was leaving the bank and thinking that I couldn't do it on my own. That was my biggest fear.
Why is that? Because we were all so technically trained at the banks. You have to be so superb. That's interesting. I felt the same way.
Yeah. So I had to train the brain. I had to train my mind to say, I had all of my contacts at the banks, but I found that when I left the bank, very few people were calling me back. They didn't want to talk to me. And I was like, really, I was angry for a long time about that. So I had to just really reinvent myself, which is what I did. And I had to train the brain to say, Jody, you can do it. You can be on your own. You can be independent. And I really developed myself to be able to do that. I even learned with people who were independent traders at the beginning. I did that. And I needed that to give myself the confidence. And the last thing I want to say is that when traders say to me, maybe not so much now, but maybe 5 years ago, they would say, what are the banks doing? What are the banks doing? I would just get so upset. I'd say, you don't care what the banks are doing. You need to develop yourself, and it's not important what the banks are doing because it's a big market out there, several $1 trillion. You don't need to know, you just need to know what you're doing today.
Yeah, because there's two skills you need as an individual. There's a lot of skills you need as an individual investor, but the two main ones are you need to have strong trading skills, strong market reading skills. That's a kind of one category. And then the other one, you're essentially an entrepreneur. You also have to have entrepreneurial skills, and you have to manage it, the high and low of kind of working for yourself and the responsibility that comes with that. And you also have to manage the highs and lows of the markets and the trades that go against you, and don't let one wrong trade scare you out of the market or just retrench in your openness to finding opportunities. You have to always learn and control what you can control, and
And
that's
I
super
think
important in
to
trading.
Jody's point, I think it is very important. It comes down to risk management at a personal level, because even if you are following what the banks are doing, their risk tolerance is completely different than yours. Their assets, the amount of money that they're trading with is completely different. So I think the first step when it comes to personal trading and and managing your own account is to know what you can afford. Know how much you're trading, how much you're willing to lose, and then trade and create a strategy around that. That's why, in my opinion, no one strategy is right for everybody, because each and every one of us are at a different stage of our life, or at a different financial situation, different goals, and different risk tolerance. So that's the reason why it is very important to educate yourself about that and being able to read the markets and create a strategy around the risk tolerance.
Yeah, risk management is really, one second, I'll get to you in 1 second. I just wanted to follow up. Risk management is so important, and it's really interesting because when you're a trader on a trading floor or at a hedge fund, there's two ways people refer to you. They actually don't usually say trader in the market. What they call you is you're either a risk taker, or the other thing is, oh, you're a risk manager. So it's really interesting because people only think of trading a lot of the times as just taking risk. But when we interviewed people to be traders, you know, at a higher level at the banks, we always approached it as like anybody can take a risk. You can walk across the street and look at your iPhone, and that's taking a risk. People take risks every day. It's how you manage the risk once the risk is on. You have to have tight parameters. You need to know what your parameters are. So the best traders that I worked with throughout the market, throughout my careers, they were the best risk managers, not the best risk takers, the best risk managers. And did you have a question?
Yes, each of you all described some level of discrimination. Now, you broke down the wall or the barrier to get into a company that mainly hired men, I guess, at one time. But now, as you describe discrimination, do you mean in the pay, or do you mean in the promotion, or can you describe the discrimination that you're talking about?
How I can describe it from my perspective, just really quickly, is by the time I got to Wall Street, so that was like, I was 2 years at the Fed, so that was like 2001, it was recession, it was bad. So they weren't discriminating, in terms of my estimation, I was at Deutsche Bank at the time, they weren't discriminating in terms of hiring women, they were like, they would try to actively recruit women, but they couldn't get women to stay. And the reason was, from my perspective, my experiences, as you move, you know, working in an investment bank, as you know, it's move up or move out. If you're not promoted, you're gone, you know, and that doesn't matter who you are, man or woman. But as you move up the ranks, it gets more and more political and more political. And so you won't stay, nobody will stay, a guy or a girl won't stay, man or woman won't stay. They'll let you go if your skill level is not very high because it's too competitive and they can hire anybody from the world. They don't have to replace me with an American. Deutsche Bank can take a German off the trading floor. They can take a Swiss off the trading floor in Zurich. Like they don't need, you know, like they can pull from anywhere in the world. So it's super competitive. But what tended to happen to me was you get left out of meetings. You don't get invited to poker night. You know, like I worked at a bank where they had a poker night trading in a back room once a month for like big money. That they played, and only the guys got invited, and it would be like, oh, if my wife knew you were coming, like, no, like, you know, they wouldn't like that. That was always the excuse. So I got left out of dinners, I got left out of after parties, and it's very exclusive. They kind of not only leave women out, they leave, when you go to these big events with these big banks, it's like, who has the money gets invited to the party. And I mean, these are all clients, but some clients are billionaires, but some clients are only have hundreds of millions of dollars, so it's that.
Promotion wasn't part of the discrimination you're speaking of.
I won't say yes to that, and the reason is because maybe if I have actively seen people who were included, all the men in the poker nights, get better opportunities than I was, because it was like, I'm giving it to my buddy, you know what I mean? So that's what I would see. Yeah, but in terms of pay, it's usually a percentage of what you make trading, but you do lose opportunities to manage other groups because you're kind of left out of those social circles.
But you all have broken down that barrier of the hiring discrimination, but yet you have removed yourself from those businesses to go off on your own.
Yes.
So it kind of throws things off where there would be the promotion, there would be the pay, there would be the things that come after that to follow, but you've removed yourself from that opportunity by going off on your own.
To my mind, I don't believe those opportunities were going to be there. And the reason was is several, like you can read, you know, very high level people on Wall Street who've left, women especially. There's not many people to read, but you can read about it. For me, it had a lot of terms also to do with the market structure. Like my last bank, the bonus lockups came. So they're like, we're going to lock your bonus for 5 years, and I didn't want to work. In trading, bonus is like the majority, half to 2/3 of your total compensation. So if you're telling me you're going to lock 2/3 of my compensation for 5 years, I don't want to be here anymore. Bye. You know, like basically, I work for money. I have a passion for it, but I work for money. If you're a trader, you work for money, and not only that, my asset class was foreign exchange. My asset class was money. So it's like, you stop paying me the money, I stop, and I go do something else. You know.
That
So.
worked for guys and gals at
Yeah, it was both. There's a lot of people leaving, and there
just
were.
locking your bonus.
No, they locked everyone's bonus firm-wide, yeah. And then also, like, you're starting to be replaced a little bit with algo traders, so, algo trading.
I know you didn't mention this before, but because you guys came from backgrounds in finance.
Yeah.
I came as a trader just to begin with.
Yeah.
I started out as a trader. I was at the very first expos here.
Oh, good.
And even with that, the mentality of women in the expo business really, really difficult. There were only a couple of us, and when I first got into trading, this was the mid-1990s,
Yeah,
and so I approached a broker to open an account, and I just had really simple questions. I was a beginner, I didn't know anything. And he's like, well, I don't think trading's for you. You should just go do something else.
yeah,
Like, nothing to try and encourage. If it
Right,
was
yeah.
a guy, he'd have been, oh yeah, don't worry, I have no problem. In
Yeah.
fact, my partner talked to the same guy, and they're like just slap happy with each other.
yeah,
Total disparate. Every level, you would come to the shows. This was before Kim bought out the shows, the expos, and there was just not that. If you wanted to go hang out with the other speakers, you're going to the strip clubs.
yeah.
So it
That behavior stopped now, even before Me Too. It stopped at the recession because they couldn't bill that anymore. But yeah, right at the start, that was where, I'm serious. You think I'm talking, not joking. They couldn't get it through anymore. Yeah, no, it's true, yeah. Yeah,
If you want to hang out with the top guys that are at the expo, that's what you're doing.
yeah.
So it was
Times
not at all
have
But
changed.
that was the type of discrimination that I've
in the group. So it's a different perspective, but it's the same thing.
Yeah. So how did you transition was Toronto a little better or not? It was still the same.
Oh, it was better.
It was better, yeah.
Yeah.
I thought it might be, yeah. Good.
It was better.
And then when you transitioned to your business, were people supportive, or was Wall Street just like, goodbye, you're doing the wrong thing, or?
No, as I said, I lost contacts very quickly.
Yeah.
And that was how I felt it.
Yeah.
But that was okay. I made the decision. I wanted to be out on my own. My husband had his own business, and he encouraged me to start out on my own. I mean, he
Good.
saw me like being up all night long,
Yeah.
talking to all the offices, global
Yeah.
offices. He said, what kind of a life is this? You know?
Yeah.
He said, can't you start on your own? And I said, why? So we should have 2 entrepreneurs in the house, you know?
Yeah.
We're starting a family. And that's what I said to him. And he just encouraged me, and I said, okay, I'll do it. And that's how it started.
Yeah. So
For me, it was
how would you start
actually, so to her point, my discrimination was, it was something that I kind of felt it, and it was because I was in engineering. I had an engineering background, and I was really good at trading, but my boss kept wanting to, and I'm gonna just address it, this is the elephant in the room, kept wanting to push me to PR. And I'm like, dude, like, I have all these skills, and you keep wanting to put me on the screen, and it's fine, but to me, it kind of was insulting my intelligence, because they were trying to use me for something that I was not as passionate about. And that's the reason why Sarah was like, I'm literally just passionate about trading. I want to
Yeah.
continue just being an analyst and just write about it. I stopped wanting to push me on the screen because, I mean, yeah, marketing and PR, it's fun, but that is not where my passion is. And so that is how I felt the discrimination. And that's why I'm like, if I'm gonna go for a screen on you, I might as well just start my own business and do it all on my own. Because otherwise what? Like, it just insulted me in a way.
I think a lot about navigating a career path that's a competitive career path, if you have a competitive career path interest, is, you know, you have to, as you said, follow your passion. You have to really try to stay true to yourself, and you always have to try to remain, you know, in that game, even if people are ignoring you. And I think the great thing about it now that I see is that, especially in trading, I think there's so many more avenues that you have to be a trader now than you did like a decade ago. And so for me, it's great that all these avenues digitally are opening up that are going to give people different ways to trade, different ways to interact with the market. And I think that's, you know, compared to like 1998. And I think that's great. I think now is a really great time. But always kind of stay true to yourself. It didn't feel right to me, you know, on many levels to keep working at an investment bank. And it was super hard to step away. When I was telling people I'm going to leave, people were like, you are out of your mind. What are you doing? I mean, people really close to me were like, you're crazy, you worked all these years, now you're just gonna, what are you doing, you know? But you really have to stay true to yourself and true to your passion. Yes. You can go first in the striped shirt, and then you can go second in the blue shirt. Is that okay? Just because we'll do it in order of seating.
So what advice, strategy, and/or tips would you all give, like, for navigating the Forex market?
What's your favorite, what do you think the big trades are right now? Or what trades are you looking at right now in the current market?
Do you want me?
Yeah, go.
So I normally, so Forex is not my only asset right now, so let me put the disclaimer out there. I also invest in stocks and cryptocurrencies. With Forex right now, my approach has been more long-term, and I only trade the pairs that gain me an interest if I keep them overnight, because that's the only way that I can stay in the trade. So for me in the US, with the broker that I am, that would be Japanese yen crosses. So that's the reason why I've been more active on.
And when you say long-term, what do you consider long-term?
I consider long-term. I've been in some of my trades for over 6 months.
Okay.
Yeah. Yeah, but you gain the interest overnight, so you just wait the market out. So it's been working perfectly for me, and it gives me time to also manage my other portfolios.
Do you have any favorite trades right now, Jody?
Yeah, you know, on a Forex trading platform, I'm in Canada. I guess if you're in the US, it's different. Like, I can trade CFDs. So I can trade gold and oil, I can trade commodities, I can trade stock indices, and I can trade currencies. So I'm following the gold market right now pretty actively, and I'm taking position, you know, I just took a position last week, but I've closed it out.
Was that on a technical basis or a fundamental basis?
Okay, honestly, I gave a keynote speech in Dubai 2 months ago.
Great.
And they asked me to talk about the gold market. So I did a whole lot of research and analysis on gold, and I said, wow, this is ready to break out. This is ready to go up. So I was very positive on the gold market. I got a lot of investors for them that night. And seriously. And then I started to follow it after that. And we broke out. We had a nice consolidation pattern. I like patterns. I'm an L8 wave analyst, but I like looking at market patterns like triangles, consolidation patterns, drawing your trend lines, your channel lines. And I alert myself when we break out of these big patterns. I also like to look at the long-term patterns, the weekly and the monthly. Don't forget, I started trading in 1980, so I can't just look at the last 2 years of data,
yeah. right.
I have to look back to 1980. I want to see the whole big picture. So that's what I do for every single thing that I trade. So with gold, there was a really nice pattern, and it broke out. And then last week, there was another triangle, on a wave 4 triangle. And for a triangle, it's a very simple pattern. You measure the apex of the triangle, and then you project when the triangle breaks, and that's your measuring objective. And really, that's the little trade that I took last week, because, you know, a big move happened before that. So I'm following gold, and I'm last week I also took, I was short, what did I do? I was short Canada again. I mean, I took a few positions last week, but nothing major. Like, I just I felt I had time to look at the markets, and I saw a few opportunities, and I just took a few positions, and they were all good. That was a good week.
Good. I am looking continually at the Brexit saga that's going on and opportunities to short sterling, because I do more global macro. That's how I approach it. So I look for big directional trades. I want something that's going to move big, move fast. So I'm looking at Brexit. I'm looking at the Fed meeting, the 31st, whether they cut 25 or 50 basis points and what the dollar is going to do with that. And also the ECB, which meets 5 days before the Fed, and people are like inching in for another rate cut for the ECB, but it'll be super interesting. I think they won't do it until the ECB won't cut until September, so you're going to have a time where you can trade euro dollar between when the Fed cuts and when the ECB cuts, and I think that's super interesting. I'm speaking on all of this tomorrow morning at 9 a.m., so you can go into my views. And then you in the blue shirt, I'm sorry, you had a question. Do you still have a question? Yes, go ahead. Difficult aspect of Forex trading. What do you think?
Difficult aspect. Yeah, I think there's a lot of noise in the market, and you have to be so on top of news releases coming out, event risk, and especially if you're a short-term trader. And typically, when you're first starting out, you need to take a lot of trades. So traders first starting out typically day trade or momentum trade because they want to build up the trading experience. Well, when you do that, there is a lot of noise. You have to make sure that you really don't take those trades right before a news announcement or something. So there's just a lot of noise in the market and a lot of things to keep your head around, like the Fed, are they going to cut 25 basis points or 50 basis points? What I like to do is once a week, read the news, see what's out there, see the big picture. Like every month we have a monthly webinar to look at the big picture and look at the fundamentals. It's really important to look at the fundamentals to say, what is the Fed doing? What are interest rates doing? Which interest rates are higher? Like I was looking at Australia and New Zealand interest rates. New Zealand interest rates are 1.5%. Australia interest rates are 1%.
Yeah.
So that makes a difference in what you're taking a position on. So you have to be aware of the fundamentals. Just take your time, learn about them, because that's going to be the most complex thing that you're going to learn about if you don't have a business background. But you can do it because there's plenty of information out there to teach you. And just once a week, read strategy reports. Read what economists are saying, what Forex strategists are saying, the good ones. You'll figure out who the good ones are. And just really do that in combination with your technicals.
Yeah, I run a event risk webinar as well. It's mid-month. You can go to my website and find it, marketcompassllc.com. But what I want to emphasize is one of the best ways is what you described to mitigate these like headline risks, these headline bonds, this uncertainty, is to have a really strong event risk calendar that you know really well, because headline bombs and uncertain announcements tend to pop up around important events the day before, the day of, the day after. And so knowing that in the risk landscape is really important to helping mitigate risk, to either hedge your portfolio or use it as an opportunity to initiate a trade. So
So for me, the biggest, the hardest part of Forex trading, especially in the short term, is as well the market noise, and how I have been mitigating it is to go longer term, and also to include fundamental analysis, obviously very important, and being able to verify that, okay, this event risk is going up. Is this a buy the rumor time, or is this because a lot of times the headlines are going to impact the market before the actual event. So you have to keep that in mind. So for that, I also take a look at market sentiment to see how the markets are actually reacting to this event risk. For me, even though I'm a longer term investor, I do look at the markets every Tuesday, because I think that's the day that, it's not Monday, the market is not just waking up. We have the whole rest of the week in front of us.
They're a little more settled in on a Tuesday.
Right, so I look at the markets there on Tuesdays. That is when I have my weekly webinar. And so I look at the fundamentals, I look at the market sentiment, but at the end of the day, I make the trading decision based on the technical analysis that is correlated to my risk tolerance. So, and that is what I teach on investiva.com, I guess.
Yeah. So interesting. Yes, one more question.
I choose it based
It's
on.
it's your pet currency because you started with
It's
it and
my
you
pet-
did it.
it is my
Everyone kind of
love.
has, I think, everyone like has a
Yeah.
little pet currency, your favorite currency
Like
that
I
you love
stay
to
away
trade,
from
right?
Brexit because
Favorite
I
one.
lost during Brexit, and I'm like, you know what, bye bye, I don't want to like you.
Yeah.
But with the Japanese yen, the real reason why though is because with my broker, I go to their calculator, their interest calculator, and see if I go bullish, let's say on Aussie yen, I might gain an interest overnight, and I go by that. So I only trade the pairs that gain me an interest overnight. So going bearish, for example, on euro yen.
You don't do
doesn't-
negative carry.
No,
Yeah.
I don't.
Okay.
So going bearish
Right.
on euro yen, I don't even look at that.
Okay.
But for somebody else in a different country that, or with a different
Yeah.
broker that would.
So what she's saying, you explained it perfectly. We call it positive carry or negative carry. So when you're gaining the interest rate, when you're long a currency with a higher interest rate than another, you gain the interest rate, you gain positive carry. If you're shorting a currency with a higher interest rate than the other currency, then you're paying away carry. You're paying negative carry, so you have to earn more than you're paying away. That's just something you need to keep in mind. Oh, she was talking about positive carry. We call in the markets positive carry in a currency or negative carry. So if you're positive carry, the currency like you're long, it has a higher interest rate than the one you're short, so you're gaining.
And your
the
broker
interest rate.
has a calculator. Just call
Yeah,
them
they
up
have a
and ask
calculator
them,
on it,
where can
right?
I find the interest calculator? And
Because
that's
some
when you-
people come to me and be like, I want to short the Argentinian peso or something, and which is like an NDF, it's hard to do. But anyway, it's like, well, yeah, it's like 40% interest rate. So like you're paying away 40% negative. You can't do that. You just have to be aware of those things, but the broker should calculate it on the interest.
Right, we're gonna be heading into
Thank you so much.
here, so
I just, one more thing I wanted to say is,
Can I
I
say
think,
one more thing
oh
too?
yeah,
Okay.
two more things. I'm going to say this
I
first.
want to tell them where
Yeah.
they can find you.
Oh, yes.
The show and any flash closing remarks.
Yeah, awesome. Hi. I just wanted to say thanks, everybody. And I think the strength and the individual investing community, because I'm new to it, that I learned over the past year, is that we all kind of have each other. You can find us, you can find each other. And I think there's strength in numbers, to create kind of an individual investors, trading community where we can ask and learn from each other and share trading tips. I think there's a lot of power in that. You can find me at www.marketcompassllc.com. Some of my cards are over there on the table, and my email is also on it. Go ahead.
I want to, thank you so much. You can find me at fxtradersedge.com, Jody at fxtradersedge.com, but I just want to say that I wrote a book, and I'm going to be speaking about it tomorrow, forgot what time, called The Trader's Pendulum, The 10 Habits of Highly Successful Traders. You can get it on Amazon, and it's a really good book. It will help you. It answers like a lot of the questions that you asked, and it really goes through the basics. Trader's Pendulum.
At 2:30.
2:30 tomorrow. I'm going to talk about some of the habits.
9 a.m., 2:30.
And I am going to talk about actually 3 secrets to adding cryptocurrency to your portfolio without taking too much risk tomorrow, I believe at 9 something. But
There's a lot of changes in the schedule. So.
I know. So you can find me on investdiva.com. You can tweet at me. You can
No,
go
no,
on
I know.
Instagram. I've been trying to become more social. So definitely feel free to go and find me. Oh, I just actually also, I'm going to report that we launched a podcast and a YouTube series so you can, again, just Google Invest Diva. And I'm also going to have a book signing tomorrow for my newest book, Cryptocurrency Investing for Dummies. So I hope to see you there.
Kiana, you are on at 9 to 9:45 tomorrow as well.
All right. I
Okay,
have
so
to wake up
crypto,
early.
9 to 9:45. I am 9 to 9:45 as well with global macro. We're going to look at global macro markets and 2:30. And you can find us in the programs. Thank you so much. Thanks for your time. Thank you, panelists. Thank you.